welcome. So I'm going to keep this one short. Okay, so this is going to be that 180 phase changer, but I want to keep these ones a bit shorter rather than like the other two were quite long. So I'm going to just keep this short and add to it as I go. So the first thing I wanted to do is introduce like this 180PC, because I know that this is, for one, it's probably the simplest strategy of them all. But then it's where a lot of you guys that generally start when you guys do go through the 5 strategies. So it's a good one to start. Don't get me wrong. It's absolutely, just because it's simple doesn't mean it's bad. Keeping simple is good, and I will use this one as like a real reference for a lot of strategies or a lot of entries that I do use, because as the name implies, like 180 phase changer, it's when you're changing your phases from like a phase 2 to a phase 1. So you're going from like a correction phase to a trending phase, from exhaustion to impulsive phase. So it's one that can be used and very, very, very effectively for as a starting point for many strategies. So just going to get into it, right? So where do I start? Where do I start with this one? First of all, what we need to make sure you understand is what is the strategy itself. Okay, so it's a trending strategy. Let me just go into here. It's a trending strategy using ring high, ring low formations and EMAs. Okay, so do familiarize yourself with what a ring high, ring low is. Okay, so that is in relative price under ring high, ring low. I'll just bring it up. Okay, let's just make this full screen. Okay, so I know it's about your C bars, but bear with me. So for a ring high, what we have is a candle, any candle. Every single candle is the first candle 1, and then when you have it's a 2-bar pattern. When you've got a second candle, it makes a higher high and a higher low. That would be a ring high forming. If this is in a downtrend and we have a candle breaking the low of candle 2, the highs and lows are very important. When a low gets broken, that's a very bearish sign. Okay. Conversely, if we keep on making higher highs, we're trending up. You should be able to see these without the signals needed. Okay, so do see that here. Okay, you see that we've got ring lows in an uptrend. Okay, we're only looking for ring lows in an uptrend, and Smart Charts is only going to point them out when it's only going to point out ring lows when your yellow EMA, your 8, is above your 20. If it's the other way around, it'll only point out ring highs. But if we take these EMAs away, at all the turning points, okay, not all, but at a lot of turning points in the market, it's going to be where you got a ring low. This is going to be that's not a ring high. So ring low, this is a ring high, this is a ring low, this is a ring high, this is a ring low, this is a ring high forming. Okay, a completed ring high is when the next candle, which would have to be a bearish candle, breaks the low. Okay, when it breaks the low, that would be a completed ring high formation, and you can confirm it'd be a confirmation that the trend will be turned into a corrective phase rather than impulsive phase or bullish phase in this case, because the trend is actually up. I'm going to skip straight to the charts. Okay, so because I want to keep this focused on what am I looking at? What's the first thing I do? First thing I do is I'm looking at my daily chart. Okay, I'm using the daily as my higher time frame. The H4 would be the entry time frame. In phase changes, it's a slow strategy. Okay, so we do bear in mind that it's a slow strategy. It's 4 hours, takes a lot of waiting. Some trades can take quite a while to play out. Some can be quite quick. But where do I start? First place I start is my daily. Okay, I'm gonna take trades on my H4. I'm gonna use the daily as my higher time frame, and I'm gonna manage my trade, which I'll cover in a different video. I'm gonna manage my trade on my lower time frame. Okay, one time frame below H1. What I'm looking for on the daily chart, I want to take phase changes off of daily support resistance levels. Okay, they don't always have to be a support resistance level. Like if I'm in a strong trend, then I can use my EMA, my EMAs as like a dynamic level of support, okay, or previous 4-hour support levels in an uptrend. Or if it's going to be quite a corrective movement, ideally it's coming off a daily level. That would be really ideal. So what are the things I look for in the daily? Let's just say that's all I could see. I would say I'd be reading some, I could put on a resistance. We can see that this level over here is a resistance, okay? If you guys, I really encourage watching the support resistance video that I put out, which will cover why I'll draw it like this, that this is a resistance, this is a support. I could probably just tidy it up a little bit, okay? Okay. This here would be a support, this here would be a little resistance, this here would be a little support. It's not the only places on support, okay? This is support, this is a support. It's just that this is my closest level of support and this is my closest level of resistance if I was at this candle. Now, if I was going to read these candles a bit more, I would say we had some bullish momentum. This little gap in price is actually New Year's Day, so it just is what it is. You know, sort of link these two candles together because that is just because we'll close on that Friday. Now, we had a bearish move. Okay, we had a bearish candle. It didn't break the lows. Then we had a bullish candle form. So it looks like we were ranging in this phase, in this stage. The candle didn't break the high, couldn't close higher than the previous candle's opening price. Then we had like a little inside candle. Then we had a candle with no top wick. Okay, still at resistance, so we can't really take a trade on this pair. I couldn't do anything on this one. I'll just have to leave this pair. I'd have to come back another day, know that I'm in a range, and then just wait. If I waited one more day, okay, this is how I would get a candle like this. Now this looks good. This looks good because where am I in this whole move? Okay, maybe this was a phase 1, phase 2, phase 1. Whoops. Don't know what happened there. Phase 1, phase 2, phase 1, and then we ranged. Then when this candle broke out, it looks like the phase 1 could be resuming again. So if I'm starting a phase 1 on my daily, that means I'm trending on my lower time frames, which is good. What do I like about this? I like that the candle closed quite bullish. I like that there's a wick on the top. I like that there's wick and the whole body is higher than the previous candle. Okay, so I'm making higher high than the previous candle. I'm breaking out of resistance. The resistance is actually quite clearly defined. Okay. So for me, if this was the whatever day this was, let's have a look. This was January 8, you can see down the bottom. Okay, so that means on January 9, Aussie New Zealand is on my radar. Okay, and I know where I want to be taking a phase change signal from. If I want price to pull back and sort of react off this level. Okay, if it reacts off this level, it would have to mean that from this opening price that the 4-hour candles would be pulling back. Okay. What I'd want to see is it get pretty close to the support level. Then I'm saying that I'm getting close to my support based on my daily. Daily is a very strong level of support. Of daily levels are strong. Okay. If I had a candle then that would have to be a bullish candle to break the high. That would be then giving me this ring low formation. Okay, ring low, and then for the smart charts to recognize this as a ring low, it would have to have the yellow EMA above the blue. Okay, it's the only way that it will point it out to you. But I need to use this extra discretion on my higher time frame and then using support resistance to judge where I want to take trades. Okay, so I'm going to go to the 4-hour chart. Okay, so January 9, and then you can see this is that support and those lines that I had in. Okay, so let's go back to January 7th. You see this is the range. Okay, this was that range period, that area. So this is like a no trade range. We can't really do anything here. Very risky. It's not phase change is a trending strategy, not a ranging strategy. You can see that when price broke out, okay, this is the close line. This is where the daily candle closed. Price pulled back, and then it reacted off the support, and we got a phase change signal for a buy. Okay, this is ideal. This is an ideal trade. This is ideally what I'm looking for every time that I'm looking. When I first open my charts and I look at my daily chart first. Now, I'm not going to cover trade management here, but if this closed like this, okay, and I'll be taking a trade the next day, then I would look and see how the next day closed. Okay, so I'll be looking at when the charts open, say where they open in each. It depends on your time zone. If you're in Sydney, it's going to be like at the moment the daylight savings is going to be 9 a.m. So at 9 a.m. I could look at how the previous daily candle closed. I'll go forward one day and we'll have a look. Okay, previous daily candle closed bullish, made a new higher high. Okay, so everything's telling me that we're still in this phase 1 movement. Okay, I've got nothing to worry about really until the lows start getting broken. So I could be looking for a trade again the next day. Now my support level is a bit low now, so I'm not looking to trade off this support. What I'd be looking to trade off is if I'm trending up, these levels or these levels on my 4-hour time frame would be where I'd want price to sort of come back down to give me a signal to continue in the direction of my higher time frame. Additionally, I could use an EMA, okay, as like a dynamic level of support. So let's just go to the 4-hour again, and now we're looking to trade on. See, this is how the 11th closed. So now I'm looking, my bias is long. Now I'm looking on the 12th. So let's go to the 12th of, okay, you can see this is, we sort of closed up here. Now I'm going to go to the 12th of January. Okay. Now you can see, here we go. So you can see where we get the signal. Now, my support was down here, but price is pulling back to the EMA. Okay, so it's sort of touching the EMA. That's like, and I'm using that as a support level, but it's not really reacting off the EMA. It's reacting off what's happening to the left-hand side. Okay, you can see that this is a level of resistance, now support. So where these sort of wicks are, you're getting the bearish candle forming at the support. Now, if we break the highs of this candle, looks like we'd be able to continue pushing up, because this would be phase 1, phase 2, phase 1. This is a bit of a shallow phase 2, but you're coming into a level of support to continue to the long side, or Gucci. That could be your trade. Okay, and then we'll wait to see how the next day closed. Okay, so this would be the end of the day, end of the 12th. We look at the daily chart. You come back again tomorrow morning at 9 a.m. or in the morning whenever the daily candle closes. You would see that it closed something like this. Still making higher highs, not making lower lows. So we can continue, and then so on, so on, and so on. Now, it gets to a point when we think, okay, phase 1, phase 2, phase 1. Are we getting to the pointy end of the phase 1? This is where you need to have some caution. You might want to manage your trade more aggressively, but like just watch the lows. As soon as we start breaking the lows, that you probably want to get out of your trade, or that your whole bias for the higher time frame is now done, because you're getting close to going from like a level phase 1, starting your phase 2, your corrective phase. Other ways you can sort of identify when I would be stopping, looking for longs. Maybe you got to look left. Okay, look left. Maybe all the way to the left, there's a level of previous old resistance that we're approaching. But until we hit that level, or until we start making lower lows, we are bullish. Okay, so if I move forward, higher high, higher low, higher high, higher low, higher high, higher low. Now it's looking like a rejection wick. Okay, so this is where looking at the candles again. So maybe a bit careful here. Go one more day. Now we've got price failed to make another higher high. That's a pretty big deal when we start like this, like an inside candle. This is a resistance starting to form, and we've got a candle that failed to make a higher high. The only way we can start looking for buys again is if the next candle broke the high. If we start breaking the lows, we'll be in a downtrend. Okay, or a corrective phase on the higher time frame. So that would be a sign. Maybe I've got to wait. I've got to wait and stop looking for buys right now. You can see we move forward, one more candle, broke the lows, closed quite bearish. So it's up to you if you want to be someone that can trade against your higher time frame trend. At the moment, to me, two bearish candles making lower lows, lower highs, not at a level of support, means I've got this much room to sell. Okay, I might be a bit more careful with my sells. I might not leave them to go as long as I would if I knew I was in a phase 1 on the daily, if I had like a time frame agreement. But if I'm sort of counter trend on my higher time frame, but I've got two bearish candles, I'm still trending down on my lower time frame. So I could be looking for sells down until like wherever I feel that I'm going to find some sort of support. Okay, so this is pretty clean. You can see that we keep on going down. Now, if we look in the 4-hour chart, you can see that the phase 1, phase 2s are quite well defined here. Okay, so phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, site range, phase 1, phase 2, phase 1. You're only taking signals when they're either bouncing off the EMA, or if it's a real deep retracement, making sure that they're bouncing off like a level of support, previous support, because the trend's not down until we break these swing lows, like breaking the low. Okay, so let's move forward. You can see when the EMAs cross, now smart charts can be looking for ring highs, because the yellow is now below the blue. Okay, you might not want to have taken this one because you're not really confirmed, or you could have, EMA's down. I mean, there's a few reasons why this is a fairly decent signal, because you're breaking the previous daily lows. So this could be, this is a rotation on price. Price is rotating to the downside. Where can it go down to? You look at your high time frame. Look at your high time frame for the support resistance. You see, we started moving quite nicely down. Okay, until we get to this sort of support area, and now price is ranging. Okay, we're ranging where price previously ranged. So there you have it. That would be my first port of call. Okay, I'm looking at my daily candles first. Step 1, always step 1, daily first. Those things I was looking for, I'll just go back. I'll just repeat them. So daily, I'm doing my support and resistance based on my daily time frame. I'm looking at the candle directions. How are they closing? They're closing bullish or bearish? Bullish, close the opening price. So the closing price is higher than the opening price. That's bullish. And we're making higher highs. The shape of the candle. Okay, looking at the wicks, breaking out of resistance. All these little things say, this is I'm looking to buy. I'm looking to buy. I just need to look for an entry based on the lower time frame. Lower time frame would be H4, and then once I'm in the trade, I'm going to manage it on my H1. But you've got to be well aware for phase changer. It's going to be a waiting game because your candles, your 4-hour candles. It's essentially a swing trade. It's going to take a long time. Okay, so patience is key. All right, that'll do. That'll do for this. Okay, so what I'm going to do is I'm going to release a little series for all other little elements of this strategy, and then hopefully it really helps guide you guys into creating like a successful trading plan. That's it. That's it for me. Thanks for watching. Okay.